Hey everybody, it's Jane Johnston with the Bar Hill Group at RE/MAX Camosun. I'm here actually at the RE/MAX Oak Bay office. How are you doing, Andrew?
Hey, great. How's everybody? It's Andrew Plank here with LePage. It's been a good week, and we're looking forward to another good week here. So look at this weather.
I know,
I'm
awesome.
outside in the backyard. So
Yesterday we had hail, wind, rain, you name it. It's beautiful today.
Yeah.
So I have to do a quick show today because I have a home inspection, and I'm writing 2 offers today. So
It's offer day. Monday is offer day. Yeah. That's what
so
it's now being called, everyone, because everyone is holding offers off in this busy market when they list a property, in the week. Give it the weekend. Monday is offer day.
So because that actually we listed a property, we're listing it and we're doing offers on Wednesday because we figure anybody who didn't get the offers on Monday, they can come and write on our properties.
I think Wednesday is a lot more civilized.
And then you can get your financing and they can do their pre-inspections and stuff.
Exactly.
So today we're going to talk about all the taxes that are potentially applicable to you when you purchase a home from beginning to end. And our trusty assistant, Danielle, is going to help us out today. So Danielle, start the PowerPoint.
Look at this. It just works.
Woohoo! Here we go.
There we go.
Look
at these people.
Okay, so so we just in terms of the last 7 days, we had 333 new listings and 272 pending. So we've been watching how we were very close list to sale ratio. It's a little bit different now.
Yeah, that ratio between new listings and pendings is starting to increase that gap, and it's a 50 gap of that's 60 properties now. That a gap of 60 properties approximately. So, yeah,
that's pretty good. Price
and a lot of increases.
Yeah. So, and that's just okay. Hey, my property isn't selling. How come it's not selling in 2 days? Can you please decrease it? I know that for me, we were one of those. So everybody has a different strategy how they want to sell their house. Some want to list high and see how it goes. And they're finding in this market, if you list above where the market is, you're just not going to move.
It's difficult to place these days, and some people are choosing the strategy of just not wanting to underprice. And with the market moving so quickly, they're trying to get ahead of it, or just being greedy. But oftentimes, I think a lot of times it's their main concern is what are they going to find in this market? So they better sell for as much as they can and not risk a lower price.
Yeah.
Yeah.
Okay, so we're nearly at the end of the month. So next week we'll do our March summary, but to the 29th today, we're at net unconditional sales of 1,032 compared to 608 last year. And new listings were at 1,291 compared to 1,004 last year. And so this is when COVID hit and things really went down. And then active listings were still low at 1,370.
Yeah. Yeah.
So I did this morning of single family homes in Victoria, the city itself, and there were 42.
In the city of Victoria, 42 single family homes for sale. And of those, how many do you think are under contract already?
I know I'm showing 4 today and 1 is under contract already.
Yeah. Yeah. So when you see something actually available for sale, it could be that they've already reviewed offers and accepted one, but it's just not an unconditional. So of those ones showing active, I'd say, at least a third are probably already under contract.
Yeah, and I just want to say that on 2 properties this week, I actually got accepted offers with conditions, with week-long conditions for financing and inspection.
Good to hear. Yeah, good to hear. Yeah, so that's great because that just means that people are starting to, look at and consider offers that may not have flown in the market before. Do you feel like how many offers were you competing against?
So none in both cases.
Okay.
So actually, interestingly, with the first offer, they had just had an offer collapse, and so we just went in and scooped it, literally the day of, and we had a very short timeline for a response, so we got that. And then the second one, I think it's a bad building, I would say. Like, there's going to be costs coming up, and so we made the buyer aware. But the property is so inexpensive that it's probably one of the least expensive condos in Victoria, and so.
Right.
She's just going to budget for repairs. So
Sounds good. Yeah.
Yeah.
Well, if you have the cash, then that's a good investment. If you just know that there's an upcoming assessment, but you can see your future value in that. But good job. That's great. So were these were both condos then?
Yeah. So one was in Bear Mountain, the other one was Oak Bay Border.
Okay. Yeah.
How about
Different.
you?
Well, I've got some listings coming up. I've got some buyers. I was out yesterday looking at a investment property out in Sydney, and there are some really, really trashed homes being listed right now. In this market, in these kinds of market, anything sells. But I have to have the conversation with the client and say, I think you can do better. Let's not be in a rush. So, yeah.
I had a buyer tell me that she didn't want to work with me because I couldn't show her any properties. Like it was
Right.
my fault.
Yeah. Well, maybe she found somebody who could, but there's not many to show. So
there is sort of a connection between realtors who know what's going on in the market. I'd say about half of the realtors in the city communicate about listings coming up. So you really want to work with a realtor who's active, right?
Yeah, and so being able to say, we are both members of a group where we see the upcoming listings and we talk to our colleagues. Anytime you talk to a colleague about property, you say, what have you got coming up? I just did that yesterday. I know of a 5 acre property coming up on West Saanich, by the way, rancher for around $1.5 million. Not my listing, but gonna have to call a few people on that one.
Yeah.
So
okay, so let's go through the stats. We are not the stats,
the
taxes. So I found this quote last night that in this world, nothing is certain but death and taxes, and that's for sure in BC. So next slide. So we're going to talk about what the taxes are and what your chances are for exemption. So the first one is property transfer tax. That's 1% on the first 100,000 and 2% on the balance. And Danielle's learning how
to navigate that. Next slide.
Next slide. Okay. And so this, you'll find if you've never owned a property before, you won't have this tax under a certain amount. So we'll go to the next slide. You can do the next one, Andrew.
So if you are a first-time home buyer, you can be exempted from property transfer tax. You have to be a Canadian citizen or permanent resident. You have to have lived in BC for at least a year, immediately prior to your purchase, filed at least 2 tax returns in the last 6 years, never owned a principal residence anywhere in the world. This must be your principal residence, and it must have a fair market value of $500,000 or less. If it's a resale home and less than 525, you're eligible. Sorry,
it's scaled, right?
There's a scale. There's a sliding scale, so it goes from full refund at 500,000 to 0 at 525, and there's a sliding scale between that. And eligible for a refund if you get what's PR?
Permanent residency.
Permanent residency within 1 year. If a new home, first-time home buyer, and less than 750, that still applies.
Yeah. Okay, next slide. I'll do this one. Next, the GST. So this is a goods and services tax. And it's funny because last night when I was putting this together, I was like, that's a government sales tax. Okay, next slide. So it's a federal tax. It's across Canada. It's 5%. Actually, it depends on how the listing is marketed. So sometimes they'll say like $6.99, and then in the little teeny notes they'll say plus GST. So you really want to see if it is including or not including taxes. If you have a substantially renovated home where they've moved walls and changed the structure of a building, then there may be GST, even though it's an older home.
If it's considered a completely reconstructed home, despite having the original framework or something, GST could apply. Yes.
Yeah. So in that case, you really want to make sure that it's defined in the contract of purchase and sale. And it's due upon completion, and it is not included in your mortgage financing. Next.
Wait, are we still? Yes. Okay, good.
So the exemptions are if you purchase a new or substantially renovated home and it's below a price of I believe it's $750. And if you purchase a home and more than 50% of it, just so you know, has to be for the primary residence. So if you're buying a house with a suite and you're living in the suite, you do not, and the suite's the lesser of the two sides of the building, you do not qualify. And you do not qualify if you own a property elsewhere and you're going to be using this for your retirement. So it has to be new or substantially new, and you have to move into it. Okay, next slide.
Now, GST is not applicable on resale homes, generally speaking. So just to be clear, unless, as Jane mentioned, it's been substantially renovated or it was used for business purposes. Oftentimes, if you're buying a unit that was maybe a condo unit that was used for Airbnb, is this coming up somewhere, Jane, or am I?
No, you can talk about it. Go ahead.
Okay. Yeah. So if you're doing, sometimes you buy a piece of farmland that was a farming operation, a portion of the purchase price. Doesn't have to be the entire purchase price, but that percentage of the home that was or property that was used for commercial purposes might be eligible for GST. So there is that. Yeah.
Yeah. So yeah, and I just actually want to say, yeah, I didn't actually think about that, but if you are buying a property, it's the former use that is important. So if you've used it for anything commercial, Airbnb or anything like that. Okay, next
point, the seller should be charging GST on the sale, is what's happening.
Right. So basically just use the rebate calculator. And here's the link. So go to BCREA and look for the link. Okay, and I just want to say that how you can mitigate this is just telling everybody, okay, in the contract, just be very clear the GST is included in the purchase price because the buyer gets dinged, usually not the seller. Okay, this is speculation tax. So go ahead. Do you want to press the next button, Danielle? Yeah, go ahead.
Right. Yeah. So speculation and the vacancy tax, it applies to certain areas of British Columbia. Our CRD is one of those areas. Interestingly, Willis Point is exempted, which is just a little area off of Central Saanich. But other than that, most of our CRD is part of the speculation tax. Speculation and vacancy tax runs at 0.05% or 2% of the property value.
It's actually the Greater Victoria area, not the CRD, because
right.
East
Sooke, yeah. Greater Victoria area. You can see in the orange in the background where are areas where it does apply, and then Vancouver does have its own vacancy tax as well.
Yeah, and then Kelowna area has it, but surprisingly not Whistler.
Right.
Makes me wonder, but anyway, many people of importance own in Whistler.
Don't get yourself in trouble, Jane.
Next. So it's based on your ownership in the previous year, and you have to pay it by July 1st, but you have to declare by March 31st. It's forecasted to bring in over $185 million, and they say is to reduce the empty homes taxes or allow people to live in empty homes. It is different than the Vancouver tax. They assess that differently.
Yep.
And you have to have rented the home for 6+ months a year, and it has to be a long-term rental. It doesn't apply for short-term rental.
If you're going to get an exemption, you mean you have to have rented it for 6+ months, rented or occupied for 6+ months a year.
Yeah, and it's 2%. for foreign owners and 0.5% for Canadian citizens or permanent residents who are not members of the satellite family. Whatever that means.
So we should probably make a caveat or a disclaimer here that says, always check with an accountant and with professionals as well for how it applies to you specifically. But my understanding, for example, that is, if you wanted to buy a second home and have it as a vacation property, and that home has a little rental unit somewhere on it, as long as that some portion of that home is occupied, even if it's like a 1-bedroom rental unit, for 6 months of the year, and the rest of the home stays vacant except for when you come to visit, you can still be exempted from the vacancy tax. So it's important to know that if you are still looking for a vacation property, there are options available to you, even in those areas where vacancy tax applies.
Yeah, and Shawnigan Lake, which is a popular vacation rental place around here, does not apply.
Right.
Okay, slide. We have to move a little quicker. Okay, so other exemptions are if you've just inherited it, and I have that case in one of my clients. If it's valued at less than $150,000, which I don't think I've ever seen one.
Mm-hmm.
If the person was away, so over the past year, a lot of people have been stuck outside the country or in the country, and they may be in the hospital due to medical reasons or spousal separation or work. In that case, you can apply for an exemption. Okay. Go ahead.
So foreign buyers tax, that falls within the same areas of applicability as the vacancy tax. So it's in addition to the property transfer tax. If you're a foreign national, a foreign corporation, or a taxable trustee, you must pay the additional property transfer tax on your proportionate share of the residential property's fair market value, if the property is within specified areas of BC. So it's not just what you paid for it, it's what's considered the fair market value. That's something I think is important to highlight. Some people say, well, what if, this was, what if I bought this at a great price or a great deal, and I should be paying less tax on this? But no, it'll probably be based on a arm's length assessment if it's considered a low price.
It's 20%. So this came out.
It's a massive one.
Yeah, it just came out as new construction happened, and for what it did was it took American buyers and put them on the same level field as us, unfortunately. Okay, next one. Okay, annual property taxes. Yay! Due July. So BC determines the average values of homes in your area, and I was thinking actually we could probably get an appraiser in. I have a friend who can talk to us about this. It looks at home improvements, local home improvements, and average values between May and October 1st the previous year, and it's based on the previous year's market, so it's already 6 months out of date. And I look at it as a train, so it's if the market's going up, it's going to be lower, and if the market's going down, it's going to be higher, and it's the caboose following the train. And then the municipality determines the mill rate, so that's the percentage, 0.5% of whatever. And so your property value can go up, but your tax value can actually stay the same over years, which is interesting.
But every year, the municipality determines how much money they need to run the municipality. And then they look at all the different, and then they just assume all the property values. They just divide it by all the property values. And then based on your percentage of the property value, you get your assessment based on that. So that's why Jane's saying your property value could go up, but your taxes may not if the municipality doesn't need more money.
Right. Yeah. Okay, next slide. So you can get a deferment if you're 55 plus, and believe it or not, I fell into that category now. I will say it adds up though. You can also get a deferment if you're disabled, and that's mentally or physically, and you have to prove it. And your previous taxes have been paid in full, and you have to maintain minimum equity of 25% in the property's assessed value.
Right. So we'll often see on title that some wording in the title, a charge on title that says this title is affected by the land the Tax Deferment Act. I forget what the wording is, but it brings your awareness to the fact that there's some additional taxes to be paid off because the owner has been deferring their taxes for a number of years. There is another. There's also the fact that as a homeowner, you get a rebate in your taxes, whereas if you're just keeping the as a rental investment property. Is there a slide coming up on that, or did you miss that one?
No, I forgot that. So you
Okay.
can get $500 or $600 off for being a resident of BC, if it's your primary resident.
Yeah. So when you see those taxes, you've got to keep in mind that as an owner, it's a little less than that if you're living in it. So deferment exemptions. A low interest loan mortgage program. Oh, right, we've already talked about this, but that deferment is a low interest loan program allowing you to defer paying all or part of your property taxes on a principal residence if you're financially supporting a child under certain circumstances. Oh, okay. Paying to support for child or stepchild attending school, child with disability. This I did not know.
I didn't know that either, but it makes sense. And actually, for the kid going to school, it includes going to university or college as well. So
interesting.
That's very interesting to me.
Huh. So for all of you out there with children who are looking at going to university or so forth, it looks like maybe this is worth investigating. It might be a way to help support them, even if you don't currently have the extra cash. You can defer that, and just like everyone else, live on credit.
Okay, next one. Okay, so capital gains. So this is if you're selling a rental property. So if whatever you paid for the house, which was the cost of the house, plus whatever upgrades you've done, then you subtract that from the sale price of the house and you get the profit, and that is your capital gains. And so you take 50% of that. So if you made $100,000, so bought the house, made $100,000, you take 50% of that, and then you get taxed at that whatever rate you are taxed at. And sellers who are foreign sellers, so they're not residents, permanent residents, have to withhold 25% of that until a clearance certificate is issued. And that's a big deal for people buying and selling who aren't Canadian residents.
Yeah, especially if you hold a mortgage on that property and you try to sell the property and there's 25% is supposed to be withheld, you may not actually be able to clear title. So it's really important when listing a home to just double check all the financials on that, because when the sale happens, 25% of the selling price needs to be held back.
Put into trust. Yeah.
Yeah.
And it goes to the lawyer.
Doesn't mean that the 25% is what you're being charged to sell your home. But it does mean that the Canadian government wants to hold on to that as insurance that they will get paid the taxes that they are owed on the capital gains on that property.
Yeah.
So
next. And then the final one, which is a capital gains tax on your primary home, I think is coming. And this is right now they're exempt. But I noticed that a lot of my clients are asking me, hey, what was the cost of your fees? Hey, what were all the costs associated with selling my home? I can't remember. And so we have to come up with this list for sellers. They have been reporting it to the government over the last few years. And the government thinks that it's going to cool the market and solve affordability. Personally, I don't think that that's the case. I think it'll stop the sale of homes. So
I don't think that's a great idea at all. I mean, anyway, when you own something and its value goes up and it's your primary ownership, I don't believe you should be taxed on that. But that's too bad, because if you take something and you sell it and you go buy something else of equal value, are you going to be paying taxes on that? And you've really just moved from laterally, and so now you're being hurt for moving laterally. So no, not good.
Yeah.
Anyway, I'm sure there'll be subtleties to it, but it's never a good idea. Stop it.
And we just want to say
yes.
to please talk to your mortgage broker, accountant, or bookkeeper, as well as your real estate lawyer. It's really important that you get independent legal advice on these and financial advice. And we recommend also just include the GST and any applicable tax clauses. Just ask your realtor about that information.
Yep.
Okay. So that's the end of the presentation.
Thank you.
Thank you.
Well put together, Jean, and thank you, Danielle, for running through that for us.
No problem. So I have to run to home inspection. So I just want to say, if you need to reach Andrew.
All right. Yeah, give me a call at 250-360-6106 or email me at info@andrewplank.com. And you can reach Jane at
Jane Johnston at the Briar Hill Group. I'm at briarhillgroup@gmail.com. My number is 250-744-0775. Okay, everybody, take care. Have a great week. And so next week we'll do our summary of all the stats.
Excellent. Have a great building inspection. I hope things go well.
Thank you.
Talk to you next week.
Okay, take care. Bye.
Bye.